Well, the real estate market took a bit of a break for the Easter holiday, but it's all go again. The auction market back on over the weekend. Lots to talk about in the property world this evening, including an eye-raising forecast from the UBS Investment Bank. And to talk about it all and to help you with your property questions on 13 12 83, Charles Tarbey from our sponsors, Century 21. Hello, mate.
Hello, Clinton. Nice to meet you. I actually heard your voice for a long, long time.
Great to have you.
There you go.
Great to be with you on a Monday night.
Thank you.
We did take a bit of a break over Easter. There were a few auctions on the Easter long weekend, plenty of auctions over the weekend just gone, but the clearance rates were down just a little.
Yeah, not enough to be worrying, although there was a report, as you mentioned, that suggests there is a concern. But still, when you look at them over the period of time, they're 72.1% for the week, which isn't too bad. When you get clearance rates down into the 50s and 60s on a consistent basis, then we need to start to concern ourselves. But Sydney came in at 75.8%. That's a great clearance rate, and Melbourne came in at 76.8%. So.
We have had a report today, front page of the Financial Review, from the UBS Investment Bank. They've issued a note to their clients where they're suggesting that the peak has now been reached, and not that there's going to be a dramatic fall, but the peak has now been reached because the RBA hasn't increase the official cash rate, as we know, but they are using their various levers to pressure the banks to restrict lending somewhat. We're going to talk to Dr. Andrew Wilson from domain.com.au about this later.
Yes.
But it's also based, the article in the Fin Review today bases it on those clearance rates. So up until this point, if we look at the Sydney market, and it's been eventually repeated in Melbourne as well, up to this point, the clearance rate has been above 80% for the bulk of the year, which is extraordinary. But coming back to 75%, that's only down 5%, yes, and it's still massive. I
think if they're looking at it from an overall picture, that's great. But if they're focused just on Sydney and Melbourne, they've got it wrong. And because the stats show, yes, they've been in the 80s, in some cases in the high 70s. Would have been 3 or 4 weeks ago. It was in that category. This time last year, that's the one I always try to match them against, because this time last year it was 78.4%, and we were in a really busy cycle this time last year, and everybody thought it would have slowed down by now. So it's not a great deal difference. The interesting one that I've been paying attention to and talking about a lot is the Canberra market, because the clearance rate for the Canberra market came in at 70.2%, and all through the last few weeks, we've been seeing the Canberra market in the high 60s, early 70s, sometimes 80s. So I don't think if they're going to base it on these clearance rates, they're going to get it right. The clearance rates in Perth were 22.2% this last week, and they've been low for a long time. So how are they going to judge that? And it's the same as the Brisbane market. That's been in the 40s and 50s.
We do in the media. We spend a fair bit of time talking about the clearance rate, and it's an indication of the health of the market, obviously. But tell me, as somebody with your expertise in the field, what is the percentage of those properties going to auction and those that are being sold by private treaty? And is it changing?
Right. Yeah, and that's the part. That's a really, really powerful question when you look at it from that point of view, because that doesn't come into it.
No.
And the auctions are only a small percent, a modest percent. Melbourne's probably the capital, followed by Sydney, and then you start to get other capital cities where auctions don't really favour the way in which a transaction is completed. So if they're doing it based on auction clearance rates, it's a great indicator of certain markets, even certain markets within markets. For example, in Sydney, the eastern suburbs or the lower North Shore or the inner west, they're fantastic areas because of the low levels of stock. But the further west or south or north you go, and I mean way north that you go, that's not the issue. So if they're going to do the whole thing based on Sydney, and Sydney's clearance rates are only talking about certain suburbs.
I've only bought and sold a couple of times in the last 15, 16 years. I haven't bought or sold at auction personally.
Right, okay.
My parents, who are much older than me, obviously, have bought and sold a fair bit.
I would hope so.
Yes.
Yeah.
They've bought and sold a fair bit in the past 25 years. Now, they would have, I'd say, done a couple of auctions, but most, again, have been private treaty.
And I think you'll find that that's pretty much the case. When you drive around the suburbs of most capital cities, you'll see more for sale signs than you will see auction.
Yeah. Why is it that Hobart is also doing well, along with Canberra? Yeah,
Hobart's an interesting place because it's had its ups and downs, but because its prices are so low, you can still buy fantastic brand new properties down in Hobart, for rock bottom prices in comparison to everywhere else around the countryside. And I think a lot of people have started to recognise that they're going to move their money there. Now, buying because of price, and that's something really important, Clinton, is not always the right thing to do. As a real estate practitioner, you'd like to think that people will buy and sell all all the time. But the reality is that there are times when you shouldn't buy. And if you're going to buy just to get into the marketplace, and you don't foresee any capital growth, you're going to sit there for a long period of time. I've seen people buy small one-bedder apartments going back 15, 20 years ago because they were cheap, and the price of those apartments has hardly risen, even in some of the Sydney markets. So Hobart itself is a great city, great location, wonderful, easy access when you think about it nowadays. But the reality is, if there's too many investors get in there, it's going to put some downward pressure on the rents, and that's going to cause some vacancy issues. And those vacancy issues, if you get a slight increase in interest rates, could cause some problems.
If you have a question for Charles Tarbey this evening, 13 12 83 is the number. We can take your calls. It doesn't matter if you're in Brisbane, Melbourne, Sydney. Charles can help you with your real estate questions. 13 12 83. Don't forget to have a look at their website also from Century 21, propertyfasttrack.century21.com.au. You just mentioned vacancy rates.
Yeah.
Again, it depends on where we're looking, whether we're looking in Brisbane, Melbourne, Sydney or elsewhere. But vacancy rates, I know in Sydney and Melbourne, are still very low, aren't they?
They are, and they've been operating at a fantastic level. Sydney was beaten by Melbourne a couple of times, but if you look at the vacancy rates in this last week, and we calculate it every Monday for the week just gone, the vacancy rate in Sydney was 0.68%, which is extremely low.
So less than 1%.
Less than 1%.
Less than 1%.
Less than 1%. And Melbourne was 1.36%. But the capital city that we always focus on and watch very closely, because it's giving us a precursor to what a marketplace could be like, and that's the Perth market, because it's in a very, very different place than everywhere else.
Yeah.
So I like watching that market because it's it had its ceiling and it crashed very quickly. It was a typical real estate crash when you look at it. And I'm watching the recovery rate. And the vacancy rates had climbed up over 10%, and they've been dropping every week now for the last 4 weeks, and they're down to 7.78%, which is exceptional for Perth, given what they've been through. So I'm watching that market very closely, because I look at the vacancy rates there and look at the number of listings coming onto the market there. It starts to give you a better indication. The only issue that I see with the WA market right now is population. The population may be somewhat in decline, because a lot of people had all of those jobs, don't have those jobs now, and they might be moving out. So there's a lot of settling in. And so it's the marketplace that I particularly like, because the United Arab Emirates and South Africa are incredibly strongly connected to Western Australia. And I can see a lot of South African people buying into WA when that pricing is right, and bringing it back to a nice balanced level.
Why do you see Perth as a precursor, as something that you can then tell what's going to happen on the East Coast?
Yeah,
what's the link?
We can see it. You can see the change. The change happened very, very quickly, as did in most mining areas, and it was probably a little bit too dramatic when you look at it. But if we have an increase in interest rates, and may not necessarily be from the RBA, because they can't do a great deal, they need to bring them down. If you hear about the economic woes that the country's going through, they need to reduce rates. Now, they can't do that, because when they did that the last couple of times, it impacted on the real estate market in such a negative way, in that people started buying, prices started climbing out of what we would have had a normal cycle. So if we can get the banks back on side, and the National Bank moved a few weeks ago, I think CommBank moved on Friday.
Well, this afternoon, Westpac actually moved this afternoon for investor-only owns and interest-only owned loans.
I don't see a problem with that. I think that's a good thing. But if you start to see the interest rates going up in the US, which they have been, we have to do something to follow suit at some point in time to be competitive. And I believe that's when people who are paying 4% now, and it goes to 5%, or 4% it goes to 6%. Clinton, I worked it out as something like 41% increase in your repayments if you go from 4 to 6, and that is massive. That is dramatic.
It's fair. I mean,
that's dramatic.
I grew up with parents who paid 18%, 19% interest rates.
People.
Yeah. For my generation, so I'm 40. It's much different, but because we are so heavily in debt, because property prices are so high, a much smaller movement in interest rates has a similar effect to what would have happened in the late 80s, early 90s.
And that was one of the statements that came out of the Reserve Bank governor. That was one of the comments that he made in regards to the fact that when you've got fixed loans, which most people were favouring, you're not reducing any debt. And so over a period of 4 or 5 years or whatever your fixed loan might be, you get there at the end of it, and two things can happen. One, of course, your debt hasn't reduced, and secondly, interest rates may be significantly higher, and you're going back into a marketplace that you may not be able to afford.
Hopefully with variable rates, those that are on variable rate mortgages, people have left, owner-occupiers and maybe investors as well, have left their repayments at that level they were, say, 4 or 5 years ago.
That's right,
and as the rates have come down, they've kept their repayments sitting at that level.
And they're paying their homes off nice and quickly. And I think that's an incredible key to it. But that's why, again, the banks are nervous. And look, the banks are very solid in Australia, and they pretend in many respects that they have to do these things. They are very organised, and I have no doubt there's some opportunity for them right now. There's an opportunity to improve their revenues, and again, I would prefer to be in a country with the banks that we have and pay a little bit more than to be into the US or over in the UK or in Spain where the banks, or Ireland where all these problems started, Greece, etc., and the banks just crashed. I would prefer to pay a little bit more.
131283 is a number. Just with those vacancy rates low, what impact's that having on rental rates?
Yeah, the rental rates have moved slightly down in some areas, but Sydney's still doing okay. Actually, Hobart did okay in this last week, in spite of all the talk I've just mentioned. I think overall, when I look at the rental rates, you expect movement over a period of time, but I can tell you now that the rental rates are down 2.64% since I started keeping the charts 4 years ago. So they're actually lower than they were.
That surprised many people.
When you look at on average, you've got to look at the average right across the country. They're actually lower because, especially now with more investment properties coming on the marketplace, more people out there buying and bringing them back into the real estate industry for the agents to let out. Yep, you're going to have a bit of an oversupply in some areas. Not all, of course, but some.
What about stock on the market at the moment in terms of new listings?
I would like to tell you that's increased, but the last 4 weeks it's been declining, and that's another area of concern for me. It climbed massively about 5 or 6 weeks ago by 12.1%, and then progressively it's come back. It hasn't come back 12.1%. It's probably come back half of that. But I would like to see more stock. But then we're again coming into...
Why do you think that's the case?
I don't really know. When I say that, I don't really know. I'm a bit confused by the whole process myself. Apart from the obvious being that people who want to sell can't find something to buy. Okay, put those in a certain category because there's nothing for them to buy, and so they're not going to put their homes on the market. The thing that confounds me with all of this is that there's a great opportunity for people right now to downsize, a massive opportunity for people to downsize, a great opportunity for people to purchase that holiday home that they wanted to purchase, and that's the thing that's surprising me the most, that hasn't happened to the degree I thought it would. That's what's confusing me.
We'll come back in a moment and talk to Andrew Wilson from domain.com.au. If you have a question for Charles Tarbey, 131283 is our number. This is Property Fast Track. Charles Tarbey from our sponsor Century 21 with us this evening, 131283. We'll come to your calls in a moment, but Dr. Andrew Wilson from domain.com.au is with us this evening to have a chat about, has the market reached a peak, as claimed by the UBS Investment Bank this morning. Andrew, g'day.
G'day, Clinton. Great to talk to you.
What's your view? Do you think we've reached that peak?
Well, look, it's very hard to say. One swallow doesn't make a summer, Clinton. We certainly had a very low clearance rate on the weekend in Sydney, 75.6%. That was the lowest for the year.
Hang on. Is that tongue-in-cheek there? 75%? We would have been very happy with that a year ago.
Pretty happy with that, didn't you? It's still nearly 8 out of 10 chances of knocking your property off on a Saturday. And, look, there's a few contingencies here. We're still in the middle of school holidays. We've got a long weekend with Anzac Day tomorrow. A lot of people have taken that off. We had just around 500 auctions, so there wasn't a lot of choice. So I think we need to see some sort of a trend developing over, at least a month before we start saying that the market's easing. But having said that, the further we go away from interest rate cuts, the more we will see prices growth start to moderate. But a market that's producing clearance rates over 70% is still a seller's market, and very much a market where prices are rising. So,
yes.
We've had a lot of, shall we say, hysterical headlines this year, and it's probably been a gold medal performance, I think, from some of the predictions that have been made. But I think that we're in for where we go will depend on where official interest rates go, and I still think we've got a chance of lower rates, certainly well before higher rates, unless the national economy improves. And it really is not looking that good at the moment.
No, Andrew Charles.
Good day, Charles.
Good to speak to you again.
I
I read what you said today, and I was reading from other property pundits and looking at the banks and looking at CoreLogic and all of the different conversations that are going on around this subject. And at the end of the day, I just don't think they've factored everything in. And when you think about interest rates rising, if they do, or as they have been, they're really targeting the investor more than anybody else. They're leaving the mums and dads and the first home buyers alone. I just don't know how they got to these figures by utilising the clearance rates of auctions, because they are only a small sample of what's really going on around the countryside, and they have been quite exceptional. You and I would be talking 50, 55, 60% clearance rates most of the time.
Well, that's right, Charles. And look, there are some very significant drivers that are continuing to push, particularly Melbourne and Sydney. And the main one is migration. We're seeing very strong migration into Sydney, and we're seeing near record levels of migration into Melbourne. And that does create, as you know, Charles, very short-term demand for accommodation, which puts pressure on rents and eventually pressure on prices. And supply just can't keep up with surges in migration. And we're also starting to see a turnaround in migration into Brisbane, which I think is very interesting. And I think there's plenty of upside for that Brisbane market going forward into the next 12 months. I mean, I think Brisbane has punched above its weight, really, given the headwinds that it's faced over the last 3 years. It's still growing. Prices up by around about 4 or 5% every year for the last 3 or 4 years, despite the end of the mining boom, despite the lowest levels of migration in 2 decades. Now, that's starting to turn around now.
If you were to take
demand and higher prices in Brisbane. So, look, I don't think the cycle's waning. I think the key drivers are still on the upside, and I think prices will continue to grow.
Now, if you were to take the portion of mining out of the Queensland market in terms of pricing, you'd see an even higher climb in pricing in the Brisbane market than the average that's been out there. What I can't really work out at this point in time is when is this boom going to come to an end? You know, people talk about, we thought last year it might slow down a little bit, then it took off again. What do you think the signals are that a property boom is coming? A property boom is coming to an end.
Charles, and I think there's no doubt the very strong Sydney economy, any reduction in official rates. And as I said, I think the Reserve Bank is, in a sense, in a corner here. They've been certainly part of the narrative of concern about the high price growth in Melbourne and Sydney, and yet the economy generally is not responding to lower rates. Now, Reserve Bank's charter is to, stimulate the economy through monetary policy. Our interest rates are still higher than just about anywhere else in the world. And really, we got halfway to a recession up until the last quarter. National growth was revived, but that was after falling over the September quarter. And, I think that we're just going to have to start thinking about stimulating the economy again with lower interest rates. We've got unemployment rates higher in just about every capital city now than where they were a year ago. We've got retail sales falling, and we've got this big problem of underemployment, where even though people are in the workforce, they're in the workforce in a part-time capacity, and they're looking for more work.
No doubt that's an issue, but there was an increase in full-time employment of about 60,000 last month. But Andrew, today, and you would have seen this, Westpac raised fixed interest rates for interest-only loans. So if on the one hand you've had the Commonwealth do that last week, Westpac this week, and obviously the RBA, through the regulations, is pressuring them to do that. On the one hand, why do they do that? But then for those that don't understand economics, why would they then consider an official cash rate reduction?
Well, I think this is part of what will at least neutralise the Reserve Bank going forward. I think they'll be concerned if there becomes a trend in higher interest rates from the banks, higher mortgage rates. The targeting investors has really got me concerned for the rental markets, particularly Melbourne and Sydney, which rental markets are tightening sharply now. Now, fewer investors or reduced growth in investor numbers will only mean higher rents in markets where there is already a chronic shortage of rental property.
And would you enter the debate on the removal of negative gearing and attach that in any way to what you're saying?
Now you're opening a can of worms, Charles.
Well, look, as I said, I think reduced activity. I'm not sure the Western Australians Perth housing market would be that happy about reduced activity in terms of investors or owner-occupiers. This is a very blunt instrument that we're starting to wield, in our housing markets generally. And really, the only two runaway markets, in a sense, are the Melbourne and Sydney markets. And most of the investor activity is coming out of New South Wales anyway. And as I said, this isn't good news for tenants because fewer rental properties will mean higher rents in these markets where vacancy rates are now pushing below 2%.
Always good to talk to you, Andrew. Of course, we can read your articles on domain.com.au.
Thanks, Andrew.
Dr. Andrew Wilson from Domain. He is the chief economist. So there you've heard it. Andrew Wilson believes there is the strong chance the RBA will cut the official cash rate this year. What do you reckon, Charles?
Well, if they do, I hope the banks don't pass it on.
13 12 83 is our number. G'day, Jason.
G'day, how are you?
What's your question, Jason?
I'm asking for your view on the commercial property investment. I recently bought one, so what I found is that the commercial property loan is so hard to get, and the rent is so low. So I'm asking your views on that.
Whereabouts is the commercial property, Jason?
In
roughly
Norway.
In Norway. And so is it a standalone shop? Is that what you've purchased, like a retail outlet?
Exactly, yes.
Most of the retail outlets don't want to be the bearer of bad news, but most of the retail outlets in smaller locations have lost a lot of their tenancies due to the internet, due to shops moving to more or larger shopping centres and so on. And so you don't see a lot of activity around the smaller areas. And I've seen a lot of vacant premises in many of these smaller locations. What sort of rental return were you hoping to get for it to keep you liquid?
I'm hoping to get 4 or 5% of the 4 or 5%, but it seems a bit hard.
Yeah, look, it is hard. So I can tell you now, it's easier to get a better yield in commercial than it is in residential. That part I can say to you for sure. But I think at the end of the day, you really need to find out what the market's doing with other shop owners in that area or other tenants in that area, because I'm finding it very, very easy to negotiate, if you like, a shop in an average area or a smaller shopping centre. I'm finding it easier to negotiate a better rent for a tenant than it would be a better rent for a landlord.
So what's your views in the next 3 to 5 years or 10 years for the commercial capital gains on the commercial property investment?
Well, I prefer commercial if you can get it. The only problem with commercial, and I see it climbing, the only problem with commercial is the fact that it's difficult to get a tenant. And when you do, you've got to give a lot of incentives.
Yeah, and retail's a particular area of concern. It's 27 to 8. Charles Tarbey from Century 21 with us this evening. Of course, Century 21 is the world's largest real estate company. So it does help to sell your home in your neighbourhood. It gives your local Century 21 office access to the best technology and the best knowledge base right across the world. Each office is independently owned and operated, so your local Century 21 agent knows your city and knows your neighbourhood. They know how to get things done locally, but then being part of the bigger picture allows Century 21 agents to offer a better level of service. They're drawing on the experience and the resources of more than 300 offices right across the country. And that number's growing every year. Century 21 is the fastest growing real estate brand in the country. So whether you're buying, selling, or looking for a new home to rent, contact your local Century 21 office to see why they really are smarter, bolder, and faster. The website is century21.com.au. This is Property Fast Track for our sponsors, Century 21 on Talking Lifestyle. Your best guide to the real estate market on a Monday evening here on Talking Lifestyle. It's Property Fast Track. Charles Tarbey with me this evening, 13 12 83. If you have a question for Charles about your real estate issues, let's go around the grounds. Let's check out Southport.
Yeah, I thought we might go up the coast and right down to the bottom of Australia this week to give, because I really think it's great to be able to go all around the country and find out what's going on, because each market is so different. So different.
Well, we're going to go to Queensland first. Southport. Chris Mattingley is from Century 21 Broadwater Realty. G'day, Chris.
Good evening.
Hey, Chris, how are you? And Chris used to be a TV host a long time ago.
A long time ago in a previous life.
A long time ago in a previous life.
Tell me, what's easier, presenting on television or selling real estate?
Well, they both have their challenges, but they both are very rewarding if they're done well.
Nice answer. Now, Southport's a 70-odd K south of the city of Brisbane, and you're right in the thick of things at the moment, Chris. And what we're trying to do is let people know a little bit about your area and why it's a good place to invest in, or what to look out for if you were to go there.
Well, thanks, Charles. Southport, as you know, is the centre of the Gold Coast. It's the hub. It's the central business district. It's an area which has been receiving a lot of attention in the last couple of years, both from government, state governments, announced a priority development area so developers can get in with less red tape and build more apartments for the growing demand. It's also right in the middle of the Commonwealth Games for next year, and we have just one block away from our office, in fact, the aquatic centre where all the swimming events.
I think tickets went on sale today.
Yeah, they did.
Absolutely, yeah. So it's an exciting time here on the Gold Coast, and there's lots to look forward to in the next 12 months.
I wanted to go back to something you said with regards to the ability to do more to remove the red and green tape in that area, which is what holds up a lot of the supply issues across Australia.
That's true. Both state and federal governments are aware of that and looking at it pretty carefully, but I guess on the ground we're not looking for another report and another inquiry. We're looking for action, and certainly we're finding a lot of investors, both from Melbourne, Sydney and overseas, who are coming to our area and looking for value for money, and that's what they're seeing too, because if you look at, and again, not wanting to say anything negative about the Melbourne and Sydney markets, but the degree of growth that you've had in those markets in particular in the last couple of years have sent a lot of developers looking for better value for money.
Well, those people in the south, Clinton and Sydney and Melbourne are the ones with the equity now, and they're taking it all up that way.
Look, our colleague on our sister stations, 2GB and 4BC, Alan Jones, has been talking about this issue of red tape, particularly in Sydney compared to other areas of the country, of how hard it actually is to get through all the bureaucracy to begin development. And refreshing to hear you say, Chris, that in Southport, in southeastern Queensland, it's not the same problem.
Well, it's I mean, obviously there's still some bureaucracy, but the government's recognised that in order to make it really work in some areas, and Southport's one of them, that they need to cut that back. And they've done that, which has had great success and good results, and you were seeing some of that stuff in the pipeline now. And
there was a significant oversupply on the coast for some time, so that's now... that's
the thing of the past, though, Charles.
Thing of the past, that's great. Yeah, what would you buy, say, a two-bedroom apartment in a reasonable block just away from the beach in Southport?
Well, depending again on the age and the fit-out and the size of it and the location and the views and various other factors. But the second-hand, there's good stuff around in the 400 range. New, we're looking probably high fours, low fives, upper fives if you're looking for something with a bit more wow factor. So
still very affordable from the investment point of view. What's your vacancy rate like in your area?
Very, very low indeed. In fact, one of the things we find in our agency is we're having the door run down with potential tenants, and we don't get enough landlords. So if there are any landlords out there listening and they want to rent, please do come and see us.
What sort of buyers are you seeing there? For years, the Gold Coast, Southport, was known as a place that retirees from the south would come.
That's true, and look, there's still an element of that. We do have the grain nomads who get in their caravans every year to come up to Queensland, and fortunately we're one of the first stops, and they do like it. We've got some great recreational opportunities with the surf beaches and also the Broadwater, which is a wonderful aquatic playground for a lot of people. So, yeah, we get a lot of investors, whether they be, as I said, from overseas or interstate. Those sort of people are getting good returns on their investments, typically 4, 5, 6, 7%. And they're getting comfortable returns, and because of the very low vacancy rate, great occupancy.
Yeah, it sounds like a really good growth area. Thanks for your time today, Chris.
Thank you very much, Chris.
Chris Mattingley, who's from the Century 21 Broadwater Realty with a snapshot of Southport. Charles, let's go to the other end of the country. Let's go to Tassie.
Let's go to Tassie. Now, our young producer here, young Sam's from Hobart.
He loves it.
He loves it, yes, he does love Hobart, but he's here for work. And when I told him we were going to Devonport, I think they have a Queensland, New South Wales state of origin issue going on between Devonport and Hobart. Yeah, but anyway, we'll let him argue with him about that. We've got James. James is on the line.
James Leslie from Century 20 in Devonport. Hello, James.
Evening, gentlemen. How are we?
Fantastic, James. Well, look, great to talk to you tonight about your area, and it's one of those areas that, again, a lot of people know of but may not have visited and may not know how strong the area is and how large the population is for a city so far south of the mainland. When you think about it, there's over 30,000 plus population in a place like Devonport, and you've got government involvement in that area as well that helps your economy.
There is a little bit going on, Charles. Yeah, it's been quite productive lately. I think there's a bit of a development going on in our city at the minute called the Living City Project, which is actually dragging in some outside money, which is really helpful for us. We're still a very quiet coastal town, so for us, any money injection that comes in and any progressive development is a really good thing.
How big is Devonport? Would you describe it as a city or a town?
We kind of say it is kind of classed as a city, but we call it a town. It is a coastal town. Devonport itself is about 14,000. The region's about 30. So it is still a town. It's very community-focused and very small and humble, if you will. So it's a good spot.
You've got an airport.
We have got an airport.
You've got the boat. You've got the main boat docks there.
We've got the beautiful port, where the Spirit comes in.
Yeah, there you go. So everything points into there, and you can get your car in Melbourne and be over on the Spirit, and then you can take a drive all around the place, can't you?
Mate, it's a beautiful spot. We are a tourist destination down here, and it's the place to be.
Can you tell me a little bit about the pricing? Let's just talk about the average price for, say, a brand new three-bedroom brick home in the area.
This is going to shock us on the mainland, isn't it?
I was going to say, I was just listening to Chris Southport before, and I was falling off my seat. So, look, our median for the house is about $222.
No.
Right, they're out.
No,
he's gone.
That's ridiculous.
He's gone.
Mate, it is. It's one of those things.
He's outside, James, getting somebody to book a flight right now.
I was actually talking to Sam, the producer, the other day, and I did mention the same thing. We're so affordable here. We're really, really lucky with what we have locally, and I think it's a bit of a hidden gem. So
we whinge so much on the mainland about housing affordability issues, and yes, you've got to be able to find employment. There are family connections, but that's probably something people should really actually consider. Yeah,
and I think also in that area, James, if you go back, say, a couple of years ago, what were you paying? Say before the halo effect started to kick in, were you more in the 180s at that time?
Oh, look, we kind of had our boom was about 2004, and it kind of at that time, probably previous to that, you could buy a house for under 100,000.
Wow,
so it was at a point where we've had our little mini boom in 2004 and our peak in 2009. We had a little bit of a lull in the last few years, but we're now into recovery mode. So we're in quite a strong market at the minute.
Yeah. Okay, that's just awesome thing about that. When you look again at prices and people talk about investing, you do need to get capital growth. There's no doubt about it. You can't just focus on rental return. And it appears that the cycle in Devonport might still not have occurred. The halo effect out of Victoria may not still have occurred yet.
We certainly feel like we're on the peak of something. Only reason I say that is the confidence that's kicking around here, and the outside money that we're starting to see from the mainland is a big thing for us. So we tend to focus on when we start seeing some money coming from outside in, that tends to be a bit of a draw card for us of what's ahead.
We've been talking a little bit about whether the market has peaked mainly on the mainland today, but if the Reserve Bank, for instance, was to increase interest rates, and perhaps they'd want to do that to slow growth in Melbourne, to slow growth in Sydney, what impact would that have in Tassie?
I really don't think it would be anything at all. From our understanding, we're a little bit removed from that, and I think that's probably because we are so far behind in regard to costing. So I think we're probably really lucky. We're a little bit shielded, a little protected. We're an ageing population down here, but we've got some really good solid growth. We don't get the leaps and bounds that everybody else does, but we've got a really good market. It's a solid place to be right now.
Yeah, a beautiful spot too. And James, I think it's important that people know that the marketplace in Devonport has really, over a long period of time, been nice and steady with steady growth all the way through when you average it out. And as you said, it's not impacted by the major ups and downs because it is a community unto its own. And I think when your pricing is starting at such a low level, it's very, very hard to get into trouble.
Great to talk to you, James. Thanks for your time tonight.
Thanks, James.
Thanks, James.
James Leslie, who's from Century 21 Devonport. I'm going to think about a move to Tasmania. And that's, just value-wise, it's in a different league to what we experience on the mainland. This is Property Fast Track. Have a look at this website, propertyfasttrack.century21.com.au. If you're looking to sell your home, buying your next one, or to find a reliable expert to manage your property investment, simply drop them a line and they can help you achieve your real estate goals at propertyfasttrack.century21.com.au. This is Property Fast Track for our sponsors Century 21 on Talking Lifestyle. Charles Tarbey and Clinton Maynard with you for a Monday evening, 13/12/83. Charles, let's have a look at auctions this weekend and how we've fared over the last couple of days. Matt Shalhoub is an auctioneer under the hammer time. G'day, Matt.
G'day, how are you?
Yeah, Matt's got a great understanding of the marketplace in terms of auctions, not only with years of experience, but the team of people he has around the traps. So, Matt, we've been talking about the clearance rates earlier on in the show, and we're talking about how one of the major players in the marketplace have written to all of their clients and expressed that because clearance rates have dropped now, the market's peaked and we're sort of over and we're on the way down. So what's really happening for you in some of the areas that you're working in?
Well, one thing we found across the board was there definitely was a lessened number of registered parties that we'd normally expect to see at each auction if you average it out, which, if you look at previous weeks, you probably look at an average of up to probably 8 registered parties per auction. On the weekend, we noticed there were significantly less on average across the board.
Right.
However, those parties were actively participating.
Is that potentially, Matt, because we've just followed the Easter long weekend with potentially, for many people, another long weekend? If they took today off, it was a 4-day weekend once again.
Yeah, but I think the Easter period and this week with tomorrow off is definitely having an impact. It also impacts the type and number of properties that are on the market as well, with vendors not wanting to market through school holidays and long weekends continuously.
Well, I think, Matt, also that when you talk about the number of people that have been coming to the auctions, or the lesser number, that actually has been occurring for a couple of months now, though, hasn't it?
Yeah, we noticed it more prominently probably this last weekend just gone by.
Okay.
As it's probably really may have been a bit of a snowball effect, but it's definitely been more evident last week. The prices haven't yet reflected anything other than what we've seen pretty consistently, but there was a marginal drop in the clearance rates if you look at the results across the board as well.
But in those clearance rates, say in Sydney, of 75%, that is still a high level, isn't it?
It is a high level, especially considering how many auctions still take place. I mean, if you look at something like Queensland or Brisbane, where they've got a lot lesser number, probably less than half, and their clearance rates are only at 40%. To have those kind of numbers that we see in Sydney and in Melbourne and to still be in the mid-70s, I think it still shows, good activity in the market, just an adjustment period.
Did any of your team have any interesting auctions over the weekend, Matt?
I think the most interesting auction was the property that was down actually a one-bedroom apartment in Point Piper. It was under 50 square metres without parking, but it had a fantastic view. The reserve came in just in the mid to high 8 range, the 860 range, and it ended up selling for just over 1.4.
Just so substantially above reserve. What's your forecast for the coming months? Do you think that the clearance rate will come down into the 60% range? It's going to stay strong 70s to 80s?
Look, I personally don't envisage a 60% clearance rate. I think that one thing that we've seen every single year is if you look back through, say, the last 5 years particularly, you'll find certain periods within the 12-month calendar where you get little lulls. And traditionally, I think May's always been one of those periods that's a little bit tighter. And I think it's just vendors and buyers readjusting themselves as to what to expect on both ends of the spectrum.
And does it go really quiet over Easter, over winter, which isn't really far away now?
It's not far away. I mean, look, we have always experienced a bit of a stock shortage in the Sydney market particularly. Melbourne's numbers have always been fairly consistent from what I can see looking at all the data.
Yeah.
And when you've got stock shortages, there's not that much less you can go, I guess. I always believe that winter's not a bad time to sell if you are a vendor, because there are traditionally less properties on the market and buyers are going to buy when they need to buy.
Yeah, is it a good time, and Charles, you might have a thought about this, is winter actually a good time to buy because there may not be as much competition?
It's a funny situation. When it's pouring rain outside, that's the best time to go and have a look at a property to see
if it leaks.
What it looks like. Yeah, what it looks like. But most agents, say, their open homes were terrible. And I think if you come into the winter area and your market is cold and wet, that does keep a lot of people indoors. And it is a better time to get out and have a look and negotiate. No doubt about it.
Yeah. Great to talk to you this evening, Matt.
Thank you very much,
Matt,
guys.
thank you.
Matt Shalhoub, auctioneer. Interesting to hear his take on the market at the moment. We've run out of time to take more of your calls, but of course, on your website, propertyfasttrack.century21.com.au, there's a lot of good information on that website, but our listeners can actually get in contact with you guys and get some expert advice.
They can. Look, I'm copied on every inquiry that comes in, so I can make sure it's dealt with the right office and location. There's a substantial amount of resources available to anybody that calls. They can look at any part or any aspect of the marketplace. We keep documentation because the company operates in real time, Clinton. We can literally see what's happening anywhere across Australasia. I can see what areas are the hottest in terms of listings or sales as I log in.
And I think that's the benefit of Century 21. You operate very much locally, as I was mentioning before, but you have those resources worldwide.
Look,
so
there are
information and knowledge is so important, isn't it?
There's some 7,000 offices around the world, and we do interconnect, and we do have a global website, which means that people can see anything that's listed in the back of nowhere, anywhere around the world, from anywhere around
Love
the
to buy a
world.
place in the back of nowhere.
Yeah, there you go. Well, I think we might have found a couple of those today.
Charles Tarbey, you'll be back with Nick Bennett next Monday from 7 p.m. Thank you, mate.
Thank you.
Property Fast Track thanks to Century 21.